Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Monday, and we're at the 28th of August, 2023, 6:05 p.m. Central Time. Well, a little bit of a bounce. You know, the markets were trying to figure out all weekend. I was reading about different analysts. We're going to see the Fed wants to stay on hold or raise rates. The European Central Bank, the markets are going to break Monday. It's not at all what happened. The markets went into a relief mode and got a little bit of a rally, simply because that event, number one, is over. Number two, they understand where we're at. Will the Fed raise rates? Who knows? All right. It depends what the data says. That's what the Fed chair did. He didn't tip his hand. I didn't expect him to. He did a good job of what he did. But we are going to get the JOLTS data this week. And we also have, right at the very end of the week, the U.S. jobs report. These are big numbers. You want to see what they do. They're going to give us ideas. I think along the way, we'll probably get the Challenger report, maybe the ADP. You got a lot of data on jobs coming at you. They generally come in just before you get to the U.S. jobs report. So keep your eyes ready, wide open, and ready to go. Now, before we go into the charts and more talk, I want to remind you, I hold a sale. This is Labor Day. This is the biggest amount I typically give off. So from here, if I have sales at Christmas, they won't be for 40% off. Take advantage of it, okay? Take advantage. Now, you can get any yearly research. So you can get my ETF. You can get my combo package, which is the combination of the morning subscriber videos for both ETF and futures. You can get another part, which is called the full futures research, which includes my twice daily written updates, my special updates during the day. When I see something and I want to do it, I just send them out. That's the only one you're going to get that with. That covers the futures market with it. So twice daily written and that. 40 off. Any of the charting courses, the outside day, the full charting course, Bollinger Band, 40 off. And remember, on the charting courses, you start them when you decide. Let's assume you want to buy them as a gift. Tuck it away. You tell me when to turn it on. We will. We'll give the charting software at that point and get everything going for whoever you desire. It's a great way to do it. This is a short period of time. We're going to offer it. It's over when it's over, and it's going to be very, very quick. How do you get to it? IraEpstein.com, or move your cursor to the top up here. When you get into the research area, at first you're able to see, oh, here's the monthly ones. Look at the center. You'll see there's a toggle switch. Move it to the right. All the yearlies come up for the research. And of course, when you take a look at the courses, they're all going to have your discount. We have a cart in there now, so you can put multiple things in your cart. You just add them to it, just like you do in other sites. We've had people doing it all day. Works pretty cool. All right. Pretty simple. Now, take advantage. In the stock market, a little bit of a bounce. We're getting a little bit of bounce overnight in the metal markets. Okay, I want to see that, but I don't think they're going anywhere. I think the problem really is that this is a relief rally of sorts after Jackson Hole. Nothing worse happened, and that's how I think you have to treat. Do I think the Fed is going to change? I don't know what the Fed's going to do, and nor does anyone else. They said they're data dependent. The jobs number that they're looking for this week, and remember, we do get a weekly jobs, only 117,000. That's a huge reduction. That'd be a big drop that we've seen off if it comes about. Been a lot of misses, really, but that's the whisper number that I'm already, actually, it's not even a whisper. I heard Jonathan Farrell talk about it this morning on Bloomberg. So he was the first one to give me that number, so I'll take it from there. Dollar today about stable, little bit of a rally in a number of the currencies, but they can't seem to get going one way or the other. I'd keep my eye on the yen. I think the yen could be probably the most bearish of all currencies because it appears that the Bank of Japan just wants to sit still and make sure that inflation locks in, embeds. And in doing so, it'll probably get pressured because many of the Western currencies are going to see interest rate hikes, or at least they're going to stay high relative to Japan. In the gold market, we're still underneath the 18-week moving average of closes, which means the bias is down. Now, this is important to remember because where the center line is on it is 1949. The daily charts have thrown out a short-term buy. So I've got the bias down on the weekly, and I've got the dailies trying to pick up. Not a surprise to me. You get that at these type of weeks where you get thinner trade and the market trying to balance itself going into what I'll call the full trade programs starting next week. When you look at the swing line, which is the line that attaches right here, this is a chart without the swing line. Same chart, I widen it out a little. You've got higher lows, higher highs. The market ended its bear trend when this high was taken out right over here. And this is part of what I showed you last week. When you pull a rubber band that went from over 2020 all the way down here into the under 1920, you're going to get a bounce. That's typical. That's exactly where you're at. And you're over that 18-week average. Notice something real important. The 200-day moving average of closes, 1948.40. That ties right in with the weekly at 1949. So I have a resistance point that is made up of two different areas. And when I throw in the Bollinger Bands, that's top here, they'll probably slip even further before you get there. I don't know. I'm guessing that'll be the case. And that could be even another area that comes into play. But that's the most I'd be looking for. Momentum up, so short-term trend up. Weekly's got it the other way. If you're buying it, be careful. You can't afford for the market, in my opinion, at least, to get under 1931. That takes you out of this bounce. The gold-silver ratio staying underneath the 18-day moving average of closes. Remember when we got up to the top here after this big correction, you went sideways for a bit. You're doing the identical thing here after breaking a bit. This could be where the silver market runs into a problem, and that fits in with the chart action. Here is the 100-day moving average in the upper Bollinger Band. You're fighting right there, and you're overbought as can be. When we look at the copper market, you know, this market really needs China to do something, and it hasn't done it. I think you realize that. China keeps dancing around the edges. They lowered the tax that they have on stock transactions by 50%, trying to get the markets going. As you know, they've been playing with mortgages. Evergrande Group was allowed to trade today after being suspended for, I think it was 17 months. It fell over 80%. Wow. People just want to get their money and get away from it. Big problems brewing. You still have the pattern of lower highs, lower lows. You've worked your way up in copper. You're quickly approaching overbought. Any reading over 70 is overbought. Layers of resistance start in right here at 384.75 all the way to 388, the upper Bollinger Band. So look for that to be your resistance point. In platinum, you're pulling on that rubber band. You're making it come up just like here. I seriously doubt it's going to be easy to get up and stay over the 100 and 200-day average. So between here and there, if it can reach that high, look for a lot of resistance. And the dollar, a nice run still to the upside, beginning a bit of a correction. As long as the red line, which is at 87, doesn't close underneath 79, I expect on breaks the pros to show up and buy it, looking to get back to the Bollinger Band. So that's where I'm looking at on these markets. Remember, take advantage, and this is so important, of our Labor Day sale. Move your cursor up here. It will run out this week very quickly on you. You'll get busy, you will miss it, and then you'll say, when's Ira going to do that again? Listen to me, I'm Ira. I doubt that I'm going to. I think this is too much. I tossed and turned with it, and I think I can go with smaller amounts, and people will still buy as many, and I don't have to give my money away. So you have a gift. Why? Because the trading season's right in front of you. It's like going back to school. Come on back, take advantage of it, and I'll see you in my research. Take care now. I'll talk to you tomorrow.